end with a special interaction that ET Now had with Temasek. Temasek, remember, has been consistently expanding its footprint in India, given that the country presents Temasek's third largest market after Singapore and China. In fact, its net folio, according to a release that was shared by the company, has risen to a record high of Singapore dollars 434 billion, which is essentially $338 billion during the last fiscal. It was powered by the rise in share prices of its Singaporean holdings as well as assets in the United States, India and China. In fact, ET Now caught up with Ravi Lambah, the India head at Temasek. He spoke to ET Now about the opportunities in the country, Temasek's investment outlook, sectoral preferences and goals for the Singapore investment firm in Asia's third biggest economy. Let's listen into this excerpt, this conversation excerpt that my colleague Anurag Joshi recorded with Temasek.
If we see the underlying exposure of your portfolio, in 2025, that has risen to 8%, and that is versus 6% 2 years back. Now, in the year ahead, what will your goals be of boosting your portfolio positioning in India? And can this rate, you see this pace rising to double digits in the coming years?
No, thank you for having me. So we don't allocate our portfolio to geography or sector. So we are very bottom-up driven. So the percentages you talk about are really an outcome of actual portfolio that's been invested. So just to back up, India is now 8% of our book value of the portfolio. But mark to market, our portfolio exposure in India now is $50 billion US. It was $37 billion last year. So we've seen that growth happen as a consequence of two things. One is the sort of growth in the value of our underlying portfolio in India, and also the new investments that we have, new capital that we put to work. We continue to deploy capital in India. India is an important market for us. We are positive on the long term, and on that basis, we had said 2 years ago that we would look to deploying $9 to $10 billion over the next 3 years, and this is sort of starting in the third year of that sort of estimation that we made at that time. And last year we deployed more than $3 billion, and the year before that it was close to $3 billion. So we are on track in terms of what we thought the opportunity would represent. Of course, going forward, we cannot make a prediction on what we will deploy, but at this run rate of, sort of approximately $3 billion a year, we are fairly confident that we can put it to work if we can find the opportunities. And if we find opportunities for more than that, we have the capacity to deploy more because we believe that India is a market where we should increase exposure. So I cannot make any predictions on, when it'll be a double digit of our portfolio, only because it depends on how our value investments do here, what opportunities we find, and then more importantly, how the global portfolio does, because this is a percentage of the global. So like I said, treat this as an outcome, not the way we are planning.
And given the current run rate of your investments, you see that $10 billion, you had said that goal 3 years back, that's reaching your target, you're achieving that.
Yes, we're on track for that, yeah. But it's a rolling target, so we'll keep, as long as the investment climate is what it is and it's positive, we'll keep to that run rate or more if necessary. Like I said, we have the capacity to do more if the opportunity is there.
Right. 2023, Temasek had put money in Manipal Healthcare Enterprises, over $2 billion, the biggest deal in India's healthcare industry. Healthcare was hot then, healthcare is hot today. But if in Temasek's eyes, which sectors you feel, you would put money, you would invest on those scales?
Right. Yeah, I think we're very focused on a few themes that we've outlined as important for our capital. And these are global themes. Future of consumption is one, longer lifespans, digitization, sustainable living. So we see these themes and India fitting very well together. And in that light, we've been investing and building our portfolio in India. So Manipal Hospitals as part of the healthcare, fits very well into both the sort of, the sustainable living going forward, longer lifespans. It fits very well. Even future consumption, it fits into that because healthcare services is an important part of the consumption sort of available in the economy. So I think it fits very well in that. So therefore we increased our stake, and we're very happy to report that that business is doing really well, and we keep growing that platform over a period of time. Similarly, we have a focus on financial services. We have we've always been invested in the banks. We increased that remit to non-NBFCs at one point in time. Then we divested our NBFC exposure. We moved to insurance. We continue to hold the banks because they are a very good proxy to economic growth. And then we've also more recently started looking at newer areas in financial services like asset management and wealth management, because these are now mature, reaching that stage where they're going to start benefiting from all the maturity of the capital markets as a consequence of that. So that's another theme. The other one we keep looking at is consumer and consumer tech. We made an investment in Haldiram, for example. That's a consequence of our focus on brands and consumer as a sector, which we find long-term very positive, and we think the outcome is going to be great in terms of that sector. And then the other one that we look at quite closely, of course, is technology, where we think there's going to be a lot of growth as well. So sectorally, we are focused on financial services, consumer, healthcare, and life sciences, and also technology.
Right. The Temasek review for 2025, one key area it looks at is core plus infrastructure, specifically AI, and an industry which is touted as the future. What will be Temasek's goal and your thinking about investing in AI in India, and especially data centers that are bound to power AI?
Yeah, I think it's a good question, because the sort of future of all business is going to be impacted by AI in some form or the other. So we're very focused right now on our portfolio, globally and in India, to ensure that we are understanding the impact AI will have on these businesses, whether it's a disruptive impact or whether it's an impact that can create more value and make them more efficient. So both sides we're working on, and we are doing that closely with many of our companies. We invested in a company called VFS Global last year, which is very focused on using AI to improve the outcome of the services. Similarly, UST is a services business, also very focused on AI-based solutions. And globally, we are investing in many different parts of the AI value chain. When it comes to data centers, we own a company called STT Data Centers, which actually Global Data Centers under Temasek, which is 100% owned by us. And that has a very large presence in India. It's the largest data center business, partnered with the Tata Group. And in that business, we're seeing a lot of activity in growing the India portfolio, specifically catering to hyperscalers and their requirements from AI-based data centers. So that'll be our engine for growth when it comes to that particular sub-vertical within AI on data centers.
Right. Last year, you invested in VFS. You bought a minority stake in the company. What have your goals been for VFS? What and how have you began to channelize your goals and your thinking as an investor into the future of VFS Global?
So it won't be fair for me to talk about what we're doing with any particular investment, but we partnered with Blackstone on that. They are the larger shareholder. And we came in and took a substantial minority stake, and we see that business has a very long sort of runway to it. Just given the fact that the travel continues to be a big theme globally. VFS has a very large market share globally in that space in terms of visas. They're expanding into credentials and identity cards. So there's a lot to be done, and we see that as a really what I would call a strong tailwind to continue that expansion. It's a very well-positioned business.
Since your investment in Manipal Health in 2023, what's the transformation you have brought in the company as the biggest investor, as the majority investor today in the company?
Sure. I think it's been it's been like we thought it would be, which is healthcare services in India is a very growing sector. There's a demand. Supply clearly outstrips demand in terms of quality healthcare. So our whole focus in Manipal has been working with our partners to ensure that healthcare is provided at the best possible quality and precision, and in terms of making sure that we have a very good medical outcome. We've grown the portfolio. We merged our Medica business in West Bengal into Manipal after we increased our stake in Manipal. Then recently we announced an acquisition of a chain in Pune called Siadri Hospitals, which also now adds. So in total, Manipal is now 49 hospitals in India, 12,000 plus beds, and it's really performing very well. So we're very happy with the performance. More importantly, we feel there's a long runway to keep growing because the requirement for healthcare in India is tremendous.
Yeah, so Manipal's Siadri acquisition, I mean, that was part of a broader thought process. That was a part of a broader thought process to grow the healthcare chain in India.
That's correct. So now that gives us a good foothold in the West. We were already quite strong in the East and also in the South, but we did not have much of a portfolio in the West. So Pune, we had a few hospitals. We had 3, now we added 11 to them, so that's 14. So that gives us proper scale. And that's how we will keep scaling up, geography by geography.
Yeah. Manipal is also a candidate for an IPO. As an investor, as the owner, give us a timeline about when is that happening?
We haven't defined the timeline yet, but we do think that Manipal is mature enough to go public. So now the timing will depend upon many factors, as you know. It's got to do with the market. It's got to do with what demands are required, what are needs, what the rationale for the IPO is if someone has to exit or we raise capital for M&A, etc. So there are different factors that feed into it. But the company is ready. Now we have to sit with our partners and plan timing.
In the unlisted portfolio in India, are there other candidates you would like those companies to go public, to list their shares?
Yes, I think the short answer is yes. We view the IPO as really an event in the company's timeline. There's no hard and fast rule when a company must go public. The timing should be correct. And having said that, 2 of our portfolio companies went public last year, Dr. Agarwal out of Chennai and then Niva Bupa. And we expect more of them will go public in the next 12 months. So we actually think of the IPO as part of a company's life, timeline of life cycle of a company, and this is, it'll happen at the right time.
We find the environment very favorable currently in India for exits for overseas investors through IPOs, through secondary deals. Is that something, you will again look very actively for some of your older investments?
Yes, I think to the extent we need to exit, we have never had any constraints on exiting our investments because firstly we are long term, so we can ride through volatile cycles, and so that doesn't affect us as much. But more importantly, an exit is always planned ahead, and we only plan to exit when we know we can exit. So it's not like you try this thing overnight and it doesn't fail or it succeeds. So this is part of a pre-mediated sort of approach, and we've never failed on exiting when we wanted to exit in a particular period of time. So again, public markets is one way. We can sell in the private markets too, and that also affords us many different opportunities.
Ravi, it was a pleasure to have you on ET Now. Thanks for your time.
Thanks so much
for speaking to us.
Yeah, thank you.
Thank you.
Yeah.